Howdy, Jacob here. Today we're looking at Vaalco Energy, ticker symbol EGY. So, first thing I see $486 million market cap, 383 million enterprise value. Okay, so we like that. Their balance sheet has um, net debt, so more cash than debt on hand. Um, Looking at revenue all over the place, it's going to be tough to make some assumptions. Obviously, if you took a snapshot on this year, it looks pretty great. Made 70 cents, selling for $4, paid out a 13-cent dividend. Sounds pretty great. What is that? 5.43% right now. Let's look at that payout. Okay, so that's 24 million. I mean, in the last 5 years, it looks like they can definitely produce those numbers. Oh, I misread this. So, 160 million in capital expenditures with cash from operations of 129. Huh. It's so interesting how there is a period from 2016 to 2021 where their greatest capital expenditure is 23 million, least is 2 million, and then jump up to 160 million on property, plant, and equipment in 2022, and are staying consistent year over year in the last 4 quarters. So that's interesting. What have they been doing with their free cash flow? Buying back a little bit of stocks, probably just keeping a bunch of cash. Yep, cash been going up a bit. Accounts receivable jumped 106 million. Huh. Looks like there was some big changes recently. Increase of 484 million on property, plant, and equipment. Capital lease went up 79 million. Deferred revenue 80. Looks like it was a devastation. Huh. De-investing, de-acquisition. Okay, so I mean, my assumptions are going to be a little wonky here because it's jumped up so much recently. I feel like there's no reason to assume much growth since it's nowhere near what it's been historically. Yeah, this is probably an investment, an acquisition that's not just for some reason shown on this cash flow statement here, but I might just do 0% since price of price of gas and oil has been so high recently. I might just say, you know what, it'll decline in the near future, go up over the next 7 years, 10p, because I don't see a reason why I'd need a greater multiple. Um, and we got this averaging. No, that's all over the place. I might do 15, 10. Share change has been going crazy. What's with that? Probably due to acquisition. Um, Maybe no share change because if that's from an acquisition, why is it not shown here? That's annoying. Anyways, the payout 24 million. I mean, I would comfortably say they probably have to take 80% of it. Let's say that. So that leaves at 20 cents. That's about 19 million payout. And let me be conservative here. Let me just cut it in half. So that's gonna lead to a price that would require the company to drop 40% before you get a 15% yield on a company with these assumptions. Again, it's a company that it's so inconsistent and there's been an acquisition recently. I really would have to look at the acquisition to see if it's going to produce extra revenue, produce extra margins for them, to see if this dividend can pay out and to see whether these capital expenditures are going to stay this high. Because if you're producing 100 million in cash from operations and your capital expenditures are only 20 million, that's an 80 million free cash flow, which would definitely be an attractive, for that's a little maybe 5.8 um, price to free cash flow, not bad at all. But for me right now, with everything I'm seeing in the numbers, I feel pretty good about these assumptions. I am not going to be looking at this company anytime soon. It's looking like it's going to fall quite a bit before I do more research and even think about purchasing it. So, hope everyone had a good time listening to me and has a good rest of their day. Thank you.